What's up, guys? John here. Many economists are predicting that we are going to have 1, 2, 3, or 4 rate cuts in 2024.
Rate cuts during 2024. Our next guest expects 6 rate cuts begin as early as March.
Officials still see 3 rate cuts this year.
And we're going to see this really strong economy that's going to continue on. But when you look at what they're now saying, what if Fed rate hikes are actually sparking a U.S. economic boom? Think about this. The cost to borrow money is increasing, contracting capital, and that in turn is going to make the economy boom? Maybe, probably not. Right? When you actually look at what the smartest people in the room, the wealthiest CEOs in America are doing, and then you look at what they're saying is going to happen next in the economy, you can see clearly where this is all going. And I wish it wasn't the case, but this is what's going on. I mean, look at the dates here. So this came out 3 days ago, right? 3 days ago. Then, are rates high enough? Fed resets clock on interest rate cuts, right? 19th. This came out yesterday. CNN, the Fed might not be done raising interest rates yet. Came out about 2 weeks ago, right? Or about a week ago. Then you have Fed hiking rates to 6.5% is a real risk for UBS strategists. Came out last week. There is not going to be a situation with interest rates being cut. It's not going to happen. Because what is going to happen is the billionaires and the wealthy are going to liquidate tons of stock, and they have been doing this over the last year or two, at the height of the market.
High-profile CEOs, founders, and heirs are selling a massive amount of stocks at their own companies lately. Most of them were at all-time high prices.
Now you're starting to see the market kind of go through a change. The media can, make people believe that things are going to be stronger than they actually are, and this is going to allow people a false sense of security and confidence in the market, preventing people from panic selling. Meanwhile, you have Mark Zuckerberg selling $500 million worth of stock. You have Elon Musk liquidating tons of stock. You have Jeff Bezos selling stock, the CEO of Salesforce selling stock, Walmart family liquidating billions of stock, Warren Buffett selling $28 billion in stock. You have all these really wealthy people. Some of them are, what are they doing? They're buying farmland. They're buying infrastructure. Some of them are even buying bunkers. Sam Altman, the CEO of OpenAI, what was he doing? Right? He's buying, he's getting citizenship in New Zealand, buying a bunker there with Peter Thiel. He has a getaway place out in California, in Northern California, a place in Hawaii, and he's preparing for a situation in the world that could potentially happen, where they're even talking things of like the fall of society. Now, am I saying that's going to happen? I'm not. I want to be very clear, I'm not saying that. But I'm saying that the smartest people are making pretty big bets that things are likely not going to be better in the near future. Now, I'm going to break this down for you and show you what I think is likely going to happen in the economy. Because I think we're walking into a big period of change. So much change that I don't think we've ever experienced this in our lifetimes. But when you see these headlines, it to me signals that what they're really going to do is they're going to present the perfect opportunity for the wealthy to cash out at the top, leaving Main Street to hold the bag. And then as Main Street holds the bag and they're forced to sell off these assets for pennies on the dollar, then the big Wall Street investors and the big executives are going to step in and buy up everything. That's what I think is going to happen, and I think it's going to happen starting now. Please hit the like button. Hit the like button. YouTube will share this content to educate other people about what's going on in America's economy. If you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in a credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for Monday. Take a look at this. So, it's very fascinating. When you have a 6.5% Fed's funds rate, presently, it's about 5.25% to 5.5%, and mortgage rates now are about 8% for a 30-year fixed. If you have an average credit score in America, which is a 698. Now, if Fed funds rate went to 6.5%, you'd probably have mortgage rates somewhere between 9.75 and 10, maybe 10.1%. Think about what that would do to a buyer's purchasing power. Think about what that would do to a homeowner's perceived equity in their property. The buyer pool would shrink dramatically. Right? And we would have a situation where the economy would rapidly change, and there would be a lot more motivated sellers chasing very limited buyers, right? Presenting a great opportunity to be an investor. Now, when you kind of look at this, this came out 3 days ago. Developer defaults leaves Brooklyn, New York's tallest building on the foreclosure list. The big-time real estate developers who put luxury skyscrapers on New York City skyline have a carefully crafted image as the ultimate winners. But when they lose big. This is 1,000 feet tall, right? It's 93 stories in Brooklyn. It's on the foreclosure list. The Brooklyn Tower features the mixed-use format, popular with today's developers. In addition to 138 luxury condominiums, the building has 398 rentals with a luxury pool, 50,000 square feet of retail, views in New York City skyline. As of last month, a less than 500 square foot unit sold for over 900 grand, right? So you have this, then you have this, what's actually happening. So when they say that, we're in an economic boom, how is this an economic boom? You have Dollar Tree closing 1,000 locations, Walgreens 900 stores, Macy's 150, Foot Locker 400, Gap 350, Burger King 400, Regal Cinemas 429, Kroger 413. Then you go and walk in American cities, downtowns. I mean, all the downtowns have went through a really, really big change. A lot more crime, a lot more theft, a lot more desperation in the streets. How is this an economic boom? You didn't see this in 2018, 2017, 2015, when 2020 even. Like everything was, moving in a direction where everything was, strong. People had a really good sense of security in the U.S. economy. Now, you're seeing even Walmart's ripping out self-checkouts, and why? Because of shoplifting. Are they shoplifting for sport? Are they shoplifting for survival, right? This is what's really unfolding. Red Lobster filing for bankruptcy. You have Tijuana Flats, which is a Taco Bell rival, filing for bankruptcy. So, Tijuana Flats, they're closing 11 locations, Now, what I think is going to be very interesting about the real estate market going forward is going to, I believe, change real estate investing as a whole. Over the last year, 2 years, 3 years, everybody wanted to be an Airbnb investor. Everybody wanted to do a BRRRR real estate deal. Everybody wanted to, be a house flipper. But when you can rent for 50% of the price to own, how many people are going to be able to go out there and profitably flip homes? Right? Not as many. Right? We're going to see a lot of people losing out big time holding these properties that they cannot unload. So look at this. The cost of owning a home is officially the highest on record. Redfin says, here's how bad it is out there. So the highest on record, but we're in an economic boom, right? On 700 credit score, 700 to 719, you're at 7.942% for a 30-year fixed. Average credit score in America is about 8.1% on a 30-year fixed. So let's just say if you live in Florida, you have homeowners insurance, the average is $6,000 a year. So 8% mortgage rate, 6% down, and a $500,000 a purchase, you're looking at $4,400. If you live in an area where there's very, very low cost of insurance, let's just say $2,000, you're still $4,100, right? $4,100 for a mortgage. Knowing that every single year it's probably going to get a little bit more expensive to insure that property. Property tax is going to get a little bit more expensive. Maintaining that property is going to get a little bit more expensive. How many people are going to opt in to spend 50% more to own a property than to rent? I don't think that many people. I really don't. And I think a lot of people right now are struggling to hold on to their homes. If you look at home equity line of credit, HELOC, and Google Trends, you can see what's actually unfolding. This is 2009, right? March 2009, and this is where we are right now. Right? It is absolutely breaking out. People need emergency lines of credit. And this, to me, signals, the first step before people start walking away from their homes. It's an unfortunate situation. Then you have Tesla. You have all these big companies issuing substantial layoffs, not little layoffs. Like you're talking thousands and thousands of employees being laid off. Tesla laying off 10% of their workforce. It's about 14,000 people in one shot. 14,000. Yet Elon was liquidating tons of stock in 2022. Prime market, right? Prime Tesla stock pricing. He was liquidating tons of stock. Now, some will say he was doing it for tax reasons. He was doing it to buy Twitter. Look, all the wealthy were liquidating tons of stock around that period. Why? Right? They could easily take out a line of credit against their stock for a very low interest rate, especially back then, 1-2% interest rates, for these billionaires. But they decided not to. The reason for it is if the stock crashes, they'd be margin called. They'd be forced to liquidate tons of stock at the lows of the market, and they just prefer to sell. It makes sense, right? Then you have laid off techies face sense of impending doom with job cuts at the highest since the dot-com crash. So how is this a strong economy? It is not. What we're walking into and what we're in right now is a strong hold on the U.S. population, believing that they, look at how powerful the media is. The media can say anything, right? And everyone will believe anything. Now, when they say that everything is booming, everything is great, stocks are great, Nvidia is going to 10,000, Tesla's going to 5,000, when they have these conversations, people just want to invest. They want to have their money there. You look at 2007, 2008, when things hit the fan, the media came out telling everyone, oh no, everything is going, to hell, everything is bad, you got to sell, this is going to be the end. And what happened? It sent out a domino effect across the entire economy. Everyone panicked. Right now, you're not seeing that panic across the media. So people are believing that everything is going to be strong, everything is going to be great. Put all your money in altcoins, and everything is going to be great. Bitcoin's going to $1 million, maybe, right? It could potentially, right? But when you look at structurally what's unfolding in the U.S. economy, you have to ask yourself: are we walking into a situation where investors are going to be excited to invest? Or are we walking into a situation where investors are going to be more looking just to feed themselves, right? I think we're walking into a situation where a lot of investors are going to be pulling away from the market because they have no choice but to. Look at this. Bank of America, profit hurt by losses on credit cards 3 days ago. 4 days ago, default rates on mortgage and credit cards expected to rise in months ahead, right? More Americans are looting their retirement funds. Yeah, 401ks, they're cashing out retirement funds. How is this a booming economy, right? How the top real estate CEO, 500 or more, fewer banks in 2 years. Fortress co-CEO sees commercial real estate stress. Now, when you have what is unfolding now across commercial real estate ramp up as rates increase, what you're going to start to see is a bloodbath on multifamily. And the reason for this is multifamily, 5 units and above, are valued predominantly based on the income that they receive. What the net income, the net operating income of that asset will be. But when you have a situation where rents are coming down, you have a 50-year supply of housing stock hitting the market, you have borrowing costs going from 3% to 8 or maybe 9 or 10%, you have insurance, property insurance skyrocketing, property taxes increasing, all-time highs on vacancies. What are you going to have? You're going to see a massive slash in equity across these properties. And these property owners, many of them have to refinance this year or next year. So when you have this, what are you going to have? You're going to have fewer banks are going to want to play ball with these investors. And a lot more investors are going to be given the keys back. So the portion, the $4.7 trillion in U.S. commercial real estate debt that will come due this year, and in theory must be paid off through a sale, refinance, or extended to avoid default, has ballooned from $659 billion to $929 billion, the Mortgage Banker Association said today. So you think about this. You have Blackstone raised a $30 billion, $400 million real estate fund last year, right? Raising all this money, the biggest real estate fund in history, right? What are they doing? They just, invested $10 billion, acquiring tens of thousands of properties. They just purchased Tricon, for $3.5 billion deal. You're starting to see these investors starting to pounce. But as they continue to increase interest rates, they're going to start deploying more and more and more capital. There's going to be a lot more distress. A lot of these banks holding a lot of this inventory, a lot of these bad loans, are going to need to sell. Who are they going to sell to? They're going to be selling to large institutional players. That's who they're going to be selling to. Now, everyday Americans out there that are looking at the writing on the wall, what you should be doing right now is stockpiling cash. Make sure you have a credit score, 780, 800. You have strong income, stable income. Stability is key. Make sure you have very little to no debt. Like, you don't want any credit card debt, any personal consumer loans. You want to have, just a very, very strong application when you apply for a mortgage. You want to be able to go out there and invest. And I think we're going to start to see some really, really big opportunities for smart and savvy investors that have a game plan and that are prepared for it, this year and next year. I think we're in the greatest rug pull in American history. And it's going to be, the time's running out for this narrative to be sold, that, the economy is actually booming. We're this economic boom. When they flip the light switch and they say, you know what, it's over. Jerome Powell said that he's not going to stop until something breaks. Remember that? Not going to stop until something breaks. Well, looks like something's about to break. Let's have a conversation about this in the comment section below. And if you'd like to fix your credit to position yourself for financing, maybe to buy a business, to get a line of credit for your business, to buy a work truck, to invest in distressed real estate, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in a credit report, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free call for Monday, and I'll catch you next video.